Imagine BMW, a luxury and high-performance brand, seeing a sharp drop in sales as it tries to stay competitive in the EV market. This once unstoppable automobile behemoth is currently facing problems that even their creative engineer is unable to resolve. BMW finds itself torn between its beloved reputation as the ultimate driving machine and the quickly changing market for tech-driven, environmentally concerned electric vehicles as the demand for EVs continues to soar on a global scale. With failing infrastructure, intense pricing battles, and rising consumer expectations for cutting-edge technology, Tesla and nimble upstarts like China's BYD and XPeng are not just rivals, they're changing the rules. As a result, BMW has had to reconsider its approach. This video will examine the 7 main causes of BMW's difficulties in the EV market and why the CEO of the firm is dealing with one of the most important turning points in the history of the company. Will BMW be left behind as the automotive industry transitions to a new electrified era, or will it be able to catch up and adjust? 1. Vigorous competition in the EV market. BMW is tackling the intense competition in the EV industry from all sides. Tesla, NIO, XPeng, and BYD are leading the EV industry, but more recent competitors like Mercedes-Benz and Audi are also making the switch. These businesses have responded to the EV industry with greater agility, providing premium, reasonably priced EVs that are packed with cutting-edge technology. By consistently upgrading and improving its models, Tesla, for example, has upended the market and made it challenging for established automakers like BMW to stay competitive. With its long history of producing high-performance gasoline-powered vehicles, BMW has struggled to keep up with Tesla's innovation and commitment to a purely electric lineup. Meanwhile, Chinese automakers like BYD and XPeng have joined the market with more reasonably priced models, putting more pressure on BMW to maintain its premium reputation while maintaining price competitiveness. BMW's EV division thus runs the risk of falling behind more agile EV-only companies that gain market share with remarkable technology at more affordable pricing points. Second, postponed model updates and product line extensions. BMW's comparatively sluggish expansion of its electric selection has been one of the main challenges to its EV success. With the 2013 launch of the i3, BMW made a pioneering entry into the electric vehicle industry, but its subsequent lineup expansion has fallen behind. On the other hand, rivals like Mercedes-Benz, which is introducing its EQ portfolio quickly, and Tesla, which is always introducing and upgrading models, are responding more quickly to the shifting needs of their customers. BMW has lost potential clients who valued innovation and the newest EV features as a result of this delay. Although the more current i4 and i9 models are powerful enhancements, they came out at a time when rivals were already well established in the market. Buyers of EVs now anticipate increased range, quicker charging times, and the ability to drive themselves. It is challenging for BMW to effectively compete because of the gap that has been established between what customers now demand from an EV and what the firm now delivers due to its slower product launch. 3. Brand image. Adhering to traditional luxuriance. BMW has a unique brand image and is well known throughout the world for its performance, luxury, and pure driving enjoyment. Although the company's motto, "Ultimate Driving Machine," has been essential to its identity, it has proven difficult to translate this legacy to the EV market. BMW has a strong history with internal combustion engines, in contrast to Tesla, which was founded on the idea of an all-electric experience. Because they worry about losing the distinctive handling, iconic engine sounds, and traditional driving dynamics that BMW cars are known for, some devoted BMW consumers are hesitant to accept the company's electric solutions. When it comes to BMW, the issue of brand identity arises. Should the company stick to its roots by emphasizing classic luxury and the driving experience, or should it change course and appeal to a new market that values cutting-edge technology and sustainability? This is a difficult decision because trying to combine the two could weaken the BMW brand. BMW is in a challenging position as it attempts to attract new EV customers without offending its devoted following, due to the EV industry's effort to strike a balance between history and modernity. 4. Pricing difficulties in a changing market. BMW's pricing is still a major barrier in the EV market. Due to quickly evolving technology, shifting customer demand, and a dynamic competitive landscape, the EV market is more volatile than the traditional auto industry. Setting a pricing that appeals to a larger market while maintaining the brand's opulent appeal is BMW's dilemma. The high price of luxury EVs, such as those sold by BMW, may put off buyers looking for a less expensive EV option in a market that is becoming more and more competitive. In order to boost sales, Tesla, for example, has frequently lowered the price of its models. This has forced BMW and other luxury manufacturers to fight on price while preserving their reputation as luxury brands. As more affordable EV options from up-and-coming companies like BYD and XPeng enter the market, providing an alluring option for budget-conscious consumers, this balancing act becomes even more difficult. BMW is faced with a choice: keep prices the same and risk less demand in a price-sensitive market, or cut prices and lose the uniqueness of its brand. 5. BMW's in-house green technology investment. BMW has made significant investments in green technologies, such as battery development and the creation of a sustainable supply chain, in order to remain competitive in the EV industry. With an emphasis on everything from greener materials to cleaner production techniques, the company is dedicated to lowering its carbon footprint. Future improvements in EV performance, range, and charging speed are anticipated thanks to BMW's continuous research into next-generation batteries, such as solid-state technology. However, as the brand waits for its efforts to pay off, BMW is immediately concerned about profitability because these advancements won't be publicly available for years. Even while these measures are crucial for long-term growth, they don't address the short-term market conditions, which make the ROI delay difficult for BMW. The EV industry is changing quickly, and BMW may lose market share to rivals who have more affordable and useful EV options on the market today if it waits for new battery technology and other green initiatives. 6. Infrastructure and charging solutions that are lagged. The absence of a strong charging infrastructure is another important problem affecting BMW's EV sales, particularly in areas where the company depends on third-party charging stations. For Tesla owners, the supercharger network provides a smooth charging experience, which has greatly boosted the company's popularity and devoted following. BMW, however, is forced to rely on third-party or public charging networks which may or may not be available in a given area. Potential consumers who are concerned about locating charging stations while traveling long distances experience range anxiety as a result of the absence of specialized charging infrastructure for BMW EVs. BMW will have a difficult time persuading consumers that their EVs are as useful as a conventional combustion engine model in the absence of a network that ensures charging accessibility and ease. Few other automakers, including BMW, have been able to match Tesla's extensive supercharger network, which has put BMW at a clear disadvantage. 7. The tech race and consumer expectations. Green driving solutions and state-of-the-art technology are equally important in the current EV market. Today's consumers anticipate that electric vehicles will have the newest infotainment systems, over-the-air updates, and autonomous driving capabilities. By consistently releasing software upgrades to enhance car performance and safety, and launching new features via OTA updates, Tesla has established the benchmark in this area. BMW is still improving its software and digital capabilities, which have made its EVs seem a little less technologically advanced than those of its rivals. It will need a significant investment in software development, as well as a change in BMW's business practices to catch up in the digital race. Since BMW has historically been known for its superior hardware and engineering, switching to a technology-driven business model is a difficult and resource-intensive process. BMW might struggle to match the allure of Tesla, or even more recent competitors that were created with tech-first principles in mind, unless it can completely incorporate cutting-edge tech elements. Final thought: handling the EV transition. BMW's entry into the electric vehicle market serves as a stark reminder of the enormous obstacles that conventional manufacturers must overcome in the rapidly evolving automotive industry of today. To remain relevant, the brand needs to invest in technology, reevaluate its pricing strategy, deal with intense competition, and establish dependable charging infrastructure. BMW finds itself at a crossroads as a result of the difficult effort of juggling these demands with its opulent, performance-driven character. The stakes are enormous, and BMW's future in the EV market will depend on how it handles this transition. The brand is currently engaged on a journey that is both risky and exciting as it attempts to close the gap between its legendary past and an electrified future. Let us know in the comments what you think about the BMW can't sell EVs anymore. BMW CEO panics. And don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.